Good afternoon, everyone, and welcome to the market wrap for Monday, the 19th of January. And today was quite a slow start to the week. We did actually see the Aussie market pulling back for the first time in 6 days. So, of course, last week we rallied for 5 straight days. We ended the week up by over 2%. And in fact, that 5-day rally was the longest winning streak that the Aussie market has seen in about 8 months. Today, though, pulling back by roughly a third of 1%, ending the day at 8,874 points. Of course, it was also the biggest day of the month for data coming out of our largest trading partner, China. That data dropped at 1 p.m. Sydney time, and it was largely mixed, which has been the case for quite some time now. So its economic growth or GDP target for the year was around 5%, and today's data showed that it did actually hit 5% on the dot, and that largely beat estimates of around 4.9%. But look, all of the other data was mixed, and notably retail sales grew by 0.9%, but that was the weakest pace since December 2022. So overall, we're still seeing signs of China being sluggish and struggling to recover from the pandemic. So that trend just continuing. Now, in spite of that, though, we did see the materials sector actually react quite positively. So it did hit session lows at around 12:30, about 30 minutes before that data came out, but it actually picked up after the data and ended up by 0.4% in today's session. You can see energy stocks up by 0.2% as well, and utilities actually ended as the best performer today, up by 1%, but of course last week it was the worst performer over the week when it was down by around 3%. Elsewhere, financials pulling back today, down by around 0.6%, and tech was actually hit the hardest, falling by around 2.5% in today's session. Looking at some of the winners, uranium miner Paladin had its target price raised, so its share price up around 6.5% rather today. Plus size women's retailer City Chic provided a trading update for the 26 weeks to around the end of December. While its global sales revenue dipped slightly compared to the same period last year, it was down by around 0.5%. Its US business remained profitable and exceeded sales expectations, even though City Chic deliberately reduced inventory in response to tariff volatility. So I guess those better than expected results saw its share price climb towards a 1-year high during today's session, and of course ending up by 3.5%. Elsewhere, gold miner Catalyst Resources landed back on the winners list today. Last week it topped the winners list for the whole week after it jumped by 25%, and that was after reporting record quarterly gold production, and also of course thanks to record gold prices. Today was up another 7%, and that's after its latest drilling results confirmed high-grade gold at its Cinnamon resource in Western Australia. And of course, many of the other gold miners climbing today as the precious yellow metal hit yet another fresh record high amid heightened geopolitical uncertainty as Trump threatened to slap fresh tariffs on 8 countries, including 6 EU member states, and that's until the US was allowed to buy Greenland. So notably today, silver also jumping to a record high on the back of all of that uncertainty lingering around. Now, looking at some of the worst performers, A2 Milk was quite an interesting one today. It traded flat for most of the session, then fell drastically by around 10.5% from 1 p.m. before it was put into a pause on no official news. It came out with a response to the ASX price query just before the market shut, providing a potential reason for this sell-off, saying that data was released out of China on the number of newborns in 2025, and it registered the lowest number of births since records begun. So, of course, being a major player in the Chinese infant formula market, that was reflected in A2 Milk's share price today. Elsewhere, Life360 led the declines in the tech space, doing second worst on the ASX 200 today, and Pro Medicus was down 7% on no news in particular. Fortescue also falling by close to 2% in today's session. Now, the Aussie dollar is currently sitting around 66.9 US cents, up by around 0.1%. We are firmer against most currencies except for the Kiwi. Now, looking ahead to tonight, the US market will actually be shut. They've got a long weekend over there. It's Martin Luther King Jr. Day, so they've got a public holiday this Monday, so we'll have to wait until Tuesday night until the US market reopens. And that means tonight we'll be looking to European trade to give us a lead into tomorrow's session. But of course, it does look like there's going to be a bit of a sluggish start to trade over there in Europe, considering everything that's going on. So that could lead us into a negative session tomorrow, potentially, depending on what does happen tonight. Also tomorrow we'll get some trading updates. We have BHP, which is going to be the big one. We also have Hub24 and Telix, and we also have BlueScope Steel trading ex-dividend tomorrow. They'll be paying out a special dividend on the 24th of February, and that's really part of its capital management framework. On that note, that's a wrap for today, and I'll see you again tomorrow.